Hi, Peter Jones, author, property investor and ex-chartered surveyor, and in this short video I want to think about which properties are the best for buy-to-let. Now, pre-COVID, about the only thing which I enjoyed about going to the dentist was that you could flick through the Ideal Homes magazines which they left in the waiting room. I think since COVID they've now gone, they'll probably come back depending upon when you're watching this video. But I used to love looking at the pictures of the properties in those magazines. Very glossy, very glamorous, they look like lovely properties. And I can quite understand why anybody who's new to property investing would think that the ideal would be to have a portfolio of properties that look like that. I mean, why not? It's got to be good, hasn't it? But the reality is, the answer is probably no. That's not what we're looking for. That's not the right sort of property for buy-to-let. The first thing we should be thinking about as property investors is cash flow. And to create cash flow, we need to be buying properties with a high enough return so that the rent from the property actually covers all of the costs, including the mortgage. Will you have a mortgage? Well, yes, you should have a mortgage, and I've covered this in other materials, so I won't go into it here. But bottom line, very quick summary, when you use your money in combination with other people's money, such as the bank's money in this instance with a mortgage, then the return on your own money invested is going to be significantly higher. So we're going to be looking for properties with a decent return, and I've talked about yield and return in other videos on my YouTube channel and on my blog. But basically the return is the rent from the property expressed as a proportion of the purchase price or the value. I don't want to get into all the maths of this, as I say, I've covered it elsewhere, but that's the key thing to remember. It's the rent as a proportion of the purchase price or the value. So there's a rule of thumb which we can adopt and think about when we're looking for our properties, and it is this. Cheaper properties produce a higher return. More expensive properties produce a lower return. And if you're wondering why that is, because it probably sounds a bit counterintuitive if you've never really thought about it, you'd think the properties in the sort of Ideal Homes glossy, glamorous type bracket, which are very expensive, would have a higher rent and therefore be producing a higher return. But as a proportion of the value, the rent is going to be lower. That's why they produce a lower return. Similarly, the converse of that is that with a cheaper property, the rent is going to produce a higher return because the rent is going to be a greater proportion of the purchase price or the value. As I say, I've covered this elsewhere, so if you're not too sure, go and look at those videos which talk about return. So we want cheaper properties that produce a higher return and not more expensive properties which produce a lower return. But usually comes the objection at this point, surely the higher value properties are going to produce better capital growth or are more likely to enjoy capital growth. Well, maybe, but you can't control capital growth. Capital growth is outside of your hands. It's just something which happens in the market and you can't control the market. You can't make yourself a member of the Bank of England rate setting committee, for example, and start tweaking interest rates to start driving capital growth. It's one of those things which is out of your control. And so if you buy for capital growth, really, you're speculating, you're not investing. But cash flow is something that is in your control. You can research the right property in the right area, you'll know what rent you're going to get, you can know what tenant you're going to get, and you can control the cash flow. You can work out the costs before you buy to make sure that the rent covers your costs. All of that is good stuff. So cash flow is something that you can control, and that means that buying for cash flow, in my opinion, is investing. Now, just to be clear, I'm not saying that we should buy the very cheapest properties in the very cheapest areas, because in my mind, that's sort of flagging up that if we did that, we're probably going to be buying the very worst properties, the sort of properties where we're never going to be able to collect the rent or the tenant's just going to trash the property on the way out. So we don't want that. That's just buying problems. But what we do want to do is we want to buy decent quality properties in decent but not expensive areas where we can get a decent tenant and a decent return. The word decent seems to be coming in a lot, and I know it's not really an investment term, but I think you know what I mean. And this is why many investors are drawn to buying terraced houses in northern towns. It's a bit stereotypical, but they tick all the boxes. Decent properties, decent areas, decent tenants, decent rent, decent returns. not overly expensive. They're just right, aren't they? They're good for what we're trying to do. And that's why I buy properties like these. And both of these properties are in Nottingham, and they tick all the boxes as well. I managed to buy them at the right price and get the right return. One other thought though, if you've watched my video about the 4 basic models of buy-to-let, you'll know that my model is to buy a cheap property, but to try and buy that cheap property at a cheap bargain price, if that makes sense, to then add value, usually through a refurb, and then after 6 months to refinance the property so that I can get all, or most, or at least a lot, or even just some of my money back out on the refinance so I can recycle that money and use it again. So that means that a little tweak on what I'm telling you now is I'll be looking for that decent property in a decent area, but I'll be looking for one which needs some work doing to it. Needs a basic refurb would be ideal. And that for me is the type of property we should be looking for buy-to-let. If you found this video useful, please like, follow and subscribe, and then we can keep in touch and I can send you even more great content. And if you come over to my website, www.thepropertyteacher.co.uk, and click on Learning with Peter, you'll find loads of great resources, including my best-selling home study course, The Successful Property Investor's Strategy Workshop, in which I'll take you through how I started my property business with literally none of my own money and bought £2 million worth of property in just 4 years and replaced my day job with passive income from the portfolio. It took me 4 years of trial and error to learn the best way to do this, but because I'm going to show you everything I did right so that you can copy it, and everything I did wrong so that you can avoid it, I'm sure you can achieve far more than me and far more quickly. So please visit my website for full details of this and all of my other resources. And until next time, here's to successful property investing.